Welcome to the Real Estate Reserve Podcast, the number one real estate investing podcast in the whole wide world. I'm Jason Balin from Hard Money Bankers with my co-host Ian Horowitz from Equity Warehouse. And beside us, we also have a very special guest, Derek, from the state of Wisconsin. So instead of doing, a long drawn out intro, we're just going to dive in. Welcome, Derek. How are you?
I'm doing great, man. How are you doing?
Good. Doing great. Why don't we just start with a little bit of your background, Derek?
Short version of a really long story. Started out in 2003 and thought I was God's gift to real estate investing because banks would give me all the money I wanted, and built up a pretty big portfolio. 2007, lost said big portfolio, and really started figuring out that I was not God's gift to real estate investing. And we had zero control over our business because we were using banks for everything. And so after my wife Tracy and I, we overcame a lot of obstacles. We didn't quit. We learned how to, be creative, creative deal structuring, partnering, stuff like that. And eventually we started raising private money. Got to the point where we had more money available than we had deals, and we started lending. So now we run a company called Best REI Funding here in Wisconsin, and probably the highlight of my entire real estate investing career was the day I met Jason Balin. That's total bullshit. And, so it's been a few years.
Keep going. Go on.
I met Jason a few years ago, and Chris, and so. Man, I love giving back. I love teaching, teaching based off of the stuff we've been through, and really love creative deal structuring and helping our clients, whether we're buying and selling houses or if we're lending money. That's what we're doing now.
Thanks. I got to ask. So, obviously we're going through like some super turmoil times right now where people think the end of the world's coming, whatever. And this is not political. This is what people are feeling, from a retail side of things. Everyone's a little confused. Everyone's like, the market's going to crash. It's got to crash. It's going to crash. And you said it in 2007, when you lost it all, and to be humble to even admit that, most people wouldn't. So thank you for being honest and transparent. You decided to go out and raise private capital instead of being a slave to the bank. Do you do that in your personal life as well? Do you live a debt-free lifestyle? My business partner is a big Dave Ramsey freak, and he's been sending me a bunch of stuff recently. So that's why I kind of asked like how you mentally work through that. I know we were going through your story, but I just had to stop you there because I think that's a super important point with everything that's going on right now.
So I am on my way to debt freedom. I'm not there yet. We had, because of our story, and there's a lot more to it than I can probably go into, and I don't even know how much time we have today, but it took us years to get our credit built back up to where a bank would even look at us personally or business wise. And so because of that, I just really enjoy the fact that I can deal with real people. And if there is a challenge, when there is a challenge, whether it's personal or a real estate deal, I can go have a conversation with that person and work it out. So yes, we do use banks a little bit for our personal home, vehicles, stuff like that. But everything else, right down to, on a real personal note, my wife and I had a real challenge having a family. So 2 of our 3 kids are adopted, and our first child is genetically ours, but she was an in vitro child. So we've spent $250,000 just to get 3 kids into our house, right? We spent their college tuition. They're on their own for college. That's gone.
Right.
I'm not doing it twice. But so seriously, when we were adopting my son, Robbie, which was our second child, I funded that adoption with private money because there wasn't a bank in the world that would touch me. And that was actually probably the first time I really used private money. For anything personal. So yeah, it's just become our life now.
Yeah. Well, I know when we met, you were very anti banks and into private money. And it's been really hard over the last 6 years as the institutions have really been all over this space, private lending space, working with fix and flippers, to not be to stay disciplined, to only use private money. We've only used private money as well, but there's not that many of us and you, Derek, that are only private money because it was easy for banks. But guess what happened to all those guys in a freaking light switch over the last few weeks or few months? Most of those companies are out of business. The home buying companies, the private lending company, the hard money lending companies, because they put all their eggs in the bank's basket. And just like, when COVID hit, those banks were nowhere to be found. It didn't matter if you had a deal ready to close tomorrow. Done. You weren't getting it. Draw request. Weren't getting it. There's so many benefits of using private capital in this space. Why don't we talk about your first deal? I love asking that question. Like, tell us a little bit about the first deal you ever did.
Oh gosh. So I don't do anything halfway. So my first deal was 4 at once. Back when they had newspapers, you guys remember that, but your listeners may not. There was an ad in a newspaper for a couple of duplexes, fixer-upper duplexes in my hometown. And I had called on these duplexes and they were under contract. They were gone. So that was fine. My wife and I were actually on our way to a seminar, and we went to Florida. We're taking the guru route to learn how to do this business. So we're going to the seminar. At that seminar, we agreed to build a couple spec homes. Now, this was back when it was still a good idea to build spec homes. This was late 2003, early 2004. And again, we didn't know what we didn't know. So we contracted 2 spec homes, and then on our way home, a week later, I see that same ad in the newspaper, and those duplexes were back on the market. So I went and contracted 2 fixer-upper duplexes and 2 spec homes, and they all closed within a week of each other. And boom, we were real estate investors.
And what happened then, or what you saw then, is what a lot of people have seen over the last 6 years. Like, you might have, who knows if that was a good deal or it wasn't a good deal. You thought it was a good deal at the time because you were naive, and we're all naive. And so many real estate investors are getting capital just thrown at them very easily. And all of a sudden it's like, hey, the property sold for more than I thought, right? They bought a bad deal, but it sold for more than expected. And it's like, wait, great, I made 40 grand. This is easy. Let's do it again. Let's do it again. Let's do it again. And then all of a sudden, just a house of cards that freaking collapse because they didn't have the right principles in place. And I'm not stating you didn't have the right principles, but they overlook some of those key elements because it's like, this is easy. Rinse and repeat.
Well, yeah, for sure. And back then, I made the mistake, and I call it a mistake. Most people think it's genius to go and take out a home equity line against their house. And that's what I did back then. I was using that for all my down payments and for short-term money. And I was damn lucky I didn't lose my personal home when the house of cards came tumbling down. And I see that right now. I mean, they've done that for the last couple of years because, oh my God, the rates are so low. Why would I not want to use the equity in my personal home? Well, that's great until the markets crash and you lose your personal home.
Yeah. Well, yeah. And there's a few things with that. Like, you need to be naive, I think, to do your first deal, right? Like, you see the guys that go to all the meetups and they're at every single meetup and all they're doing is analyzing. They never do the deal. And then you got the guys on the other side of the spectrum, like myself. They're like, fuck it, let's just go. Sounds like you are that kind of guy too, which I respect. But then, like, we also can get jammed up really quick, right? And, like, you need to be somewhere in the middle. But to even do a first deal, you need to be a little naive. And I know some people have done risky stuff. The question is, how do you mitigate that risk going forward? And, let's fast forward a little bit. You start building a real estate portfolio. You lose it all in 2000. You lose a majority of it in 2007. What did that look like for you? Like, what kind of a check? What, financially, like, how much stuff did you lose in the time frame, just for, like, frame of reference?
Yeah, so we had 19 doors combined with the state of Florida and Wisconsin. I think we had 8 in Florida. The rest was in Wisconsin. The stuff here at home was cash flowing fine, so that wasn't an issue. And we were able to keep a few of those properties because I was working with local banks. And I did what most people wouldn't do. I actually went in and took responsibility for my actions and sat down with the bank president, and we came up with a plan of how we were going to mitigate, the problems that were arising in Florida real estate. And so the portfolio was worth about $4 million, and it went to about $1 million over 6 months period of time. And at the end of the day, I didn't lose my personal home and some of our personal stuff. I did get forced into bankruptcy after about 3 years of trying to avoid it. So we just started flipping and robbing from Peter to pay Paul as long as we could, but eventually I couldn't do it anymore.
Well,
So.
yeah, and you didn't run and hide, which is is the downfall.
But do you think some of that
most people?
Do you think some of that survivor mode that you got put into during 07 has exploded business to where you are today?
Oh,
100%.
100%. It was a blessing in disguise. And I'd say that I'm currently authoring a book and co-authoring another book that will be out soon. And the whole story is in there. And I call it a blessing in disguise because today I get to do so many of the business things that I do. I run 3 national masterminds. I host a national conference. I get to help people hopefully avoid all the crap that we went through because of our experience. And to be quite honest, I get paid to do it, right? I mean, people pay money to come spend time with me, and I don't apologize for that because I'm a capitalist and I get to use the shit show we went through to help people, but feed my family at the same time.
Yeah. And also I think it's challenging at the beginning for everyone here who's listening or watching, because when you're in the growth phase of your business, like you do need leverage, right? You do need leverage. You do have to take risks. Or else it'll take a long time to do that, but it's got to be the right leverage. It's got to be done the right way. It's got to be done responsibly. And I think that there's a risk tolerance between, hey, should we do one deal and see how it works out? Or should we just hop in? And I know Ian did a lot of deals all at once as well. We did a lot of deals all at once, and we caught the market at the right time, and they were shitty deals, and we ended up breaking even. So if we didn't catch the market right, we would have got our face smashed in. We just got lucky that we were able to exit, right at the right time, and we thought they were good deals. Everyone thinks that they're good deals. So I think there's a fine line between like, hey, when do you kind of take some of the chips off the table? When do you stop the forward press of just, hey, cool, we made 40 grand. Let's turn it into the next deal and the next deal and the next deal and the next deal. And hey, if the bank will give us 90%, we'll take the 90%. And I think for people that have experience, that are mature, they've been around long enough, they know when that right time is. But a lot of people, if they're buying stuff kind of before that first crash, because it was so much more extreme than anything that we're probably ever going to see again, especially what's going on right now. It's a lot more extreme. But I think there's a lot of learning lessons, which is you probably could do a lot more business right now if you were naive to everything.
Well, and I think my biggest lesson out of it all was I wish I would have learned creative deal structuring before I went to a bank. Like banks should be secondary, in my opinion, to a creative deal. So any piece of real estate we make an offer on or we buy, we're making multiple offers. We're making a cash offer. We're making a financed offer, or we're making an offer to lease their property. And if you're just starting out and you don't have the cash, make sure your cash offer is so low they won't accept it. Or if they do accept it, it's such a smoking deal, you'll find a partner, you'll find the money. But I've had people over the last 3 years tell me there's no way that you can get somebody to seller finance or, all these creative structures that we do, options and lease options and sub twos and all these different ways of buying real estate other than using banks. But we've been doing it through the hottest selling market that we've seen in our life. And it's just going to get better now as the markets start to shift.
Sure.
I mean,
I was literally about to say, right before we jumped on here, the reason I was a minute late is because I was finishing up an LOI for a storage property. And literally it was, here's my cash offer. Here's my offer if you're willing to go finance a piece of the down payment and seller carry back in the second position. And here's my offer. If you want to pay, I'll pay you full price in exchange for you financing it at 0%. And I'll pay full price, but you need to owner finance the lying share of it. And I will say over the past few months, as the market has shifted, nobody knows what to do. So there's all these crazy deals that you're like, man, I would normally bid on. Like, I normally wouldn't bid on that. But the fact that you've come back to me, it's like, all right, I'll make you an offer. I just made an offer on a property out in near Nashville, Tennessee. It doesn't work if we finance it with a bank. So I called the broker. I said, listen, I'm going to make you it was listed at 6.2 million. We offered him 4.5 million cash, and we offered 6.2 if he holds it, a $6 million note at 0% interest. And the broker's like, well, why would you do that? I said, because it doesn't cash flow, man. I don't know what to tell you. I said, it's the same as buying a car at 0%. When they do all the specials, they just roll the interest in. He's like, man, I never thought of that. And now he's trying to go sell the seller for me to get this deal done. So I think you're 100% right. With the market that's presented in front of us, there's going to be some desperation. People are going to be willing to be creative. And I think a lot of people, luckily for our political climate, are willing to not go in non-traditional ways nowadays, much more than they were previous. And plus, there's so much more information out on the internet.
Well, and for me, I'm just loving this because I've been through the downturn. So it's like knowing the end of the movie already and how it turns out, right? We're already there.
Yeah.
So everybody's freaking out over bank financing going up and interest rates going up. I can go buy properties subject to their mortgages at 2.5% to 3.5% with fixed rates for 29 years left on them, right? I don't care what the bank rates are right now. I've got one under contract right now that's subject to, and I'm going at 2:00 this afternoon to another homeowner that's essentially already been, verbally locked up subject to. The rates are great.
Yeah, so that's good. Sorry, Jay, real quick. That's a really good point. You don't give a crap what's going on in the marketplace today. You might do a 40-year AM note. You might do a 50-year AM. No one says you have to do 20 or 25 or 30 years. Actually, that's how we won. Jason knows this story. A 76-unit apartment building. We financed it on a 40-year note, but we were able to pay her more because she was earning more interest, but our payment went down comparatively speaking to everyone else. And she's like, well, I like the fact that was creative and outside the box. And it still fit her goals. And it was a win-win situation. And I think that's a really valid point that everybody should say, well, just because the bank does it, and I get it, they got their name on every building in every city and every stadium you go to, maybe with the exception of the Green Bay. But every city does, is that, yeah, you think they're making a lot of money, but there's better ways to do it that it's win-win. I do that. That's a really good point to drive home. Thank you.
And also for everyone who's only been in the game for the last 10 years, they might not have experience with creative deals. This is a very common way that deals were structured back in the day. As soon as by necessity, when there's less liquidity in the marketplace, people are structuring creative deals. They're doing options, they're doing land trusts, they're doing things that, the newer real estate investors that I chat with, when they come to us for loans, I'm like, well, why don't you just structure it like this? They're like, we don't know what that is. We never even heard of that, but that makes a lot of sense. When you are putting like let's just say a residential deal under contract, you kind of alluded to this earlier. So typically you're giving them 3 offers: a cash offer, a financed offer, and then a seller financed offer. Is that accurate?
Well, so basically the way I do it, Jason, I love negotiating. I learned how to do all this when I was negotiating with banks, losing all my shit. But I try and early in the conversation, whether it's at the kitchen table or on the phone, I try and get my little elevator pitch out. And it goes something like this: Jason, you're the seller. So Jason, we can buy property in several different ways. All cash is not a problem, but that's typically going to be our lowest offer. If that doesn't fit your needs, we've taken over people's payments, or if you don't have debt, we can make payments to you over time, or we can lease your property and put a document in place called an option to buy it at a future date if that helps with your tax scenario. I just want you to know there's multiple ways that we can help you today. End of my elevator pitch. So if you do that in the first couple of minutes of your interaction, now every question that you ask moving forward, they're going to be open and responsive to. You're going to start asking questions about their debt, and some people will clam up. Well, now they know why I'm asking that question. So by the time I get to actually making my offer, it's going to be based on that conversation, right? I may not structure it and say, okay, here's 1, 2, and 3. There might only be one offer, but it was because that's where the conversation led us to. So now I know that subject to is the best way, or an option is the best way, or, stacking strategies. For example, I might want to buy their property, but they're in a short-term capital gain scenario. So maybe we'll lease it for 6 months with an option and close on it when they get into a long-term capital gains, scenario.
It's so funny. It's so funny you said that, and I'm glad you said it, because so many people out there don't understand the principles of selling. They're lazy investors. Hey, let's just go let's just go buy a property off MLS. Like that's not where it's at, right? Could
No.
you be lazy and do that in certain periods of time? Sure, but it's all of this goes back to kind of old school selling techniques. I remember I learned this stuff because my only job ever that I had a W-2 was I was a salesperson at a athletic club in the state of Colorado. And it was the best job I ever had in my life because I learned how to sell, right? You go through the needs analysis, building rapport, you go through all the whole steps. And I still have my booklet in my office right here. And whenever anyone asks me, when they're newer, they're younger business partners of ours, I'm like, read this. This is, from my sales journey when I was 20 years old. And I understood, I was doing 50 sales a day, right? That means I was talking to hundreds and hundreds of people and going through the process. But it's the same thing you just said. Like people need to understand what not only obviously building rapport is the most important thing for you to do when you meet a homeowner, because if they don't like you, they're never going to sell you a property. They're never going to borrow money from you. They're never going to invest money with you. But then you need to understand what they're trying to accomplish, because what you think or what somebody thinks the seller's trying to accomplish is typically always wrong, right? It's just like, oh, they just want the most money. That's not necessarily true. I mean, Ian's deal was a freaking, he got the whole damn thing seller financed, millions and millions of dollars, because she didn't want the capital gains tax right now. She wanted seller financing was great for her.
And the biggest thing is you got to listen to what the seller wants. She said several times, I want to be able to take care of my mother. The monthly payment's about $20,000 a month for full medical needs. So we started crafting plans to say, well, how can we get her to $20,000 a month in a mortgage payment? That's a win-win situation for us. And that's ultimately how we won the deal. And if you would have did it in other fashions, it wasn't. And the payment wound up being $21,000 and change. And I think her monthly nut was $20,000. And if she was going to sell the apartment and give up her monthly cash flow, she still wanted her mom taken care of. Jay, you're absolutely right. The number one thing in sales is listening and frame control. I think a really good book, I don't know if you've read it, Derek, is I want to go back and read it, is Oren Cleff's book, Pitch Anything. When he talks about frame control and setting expectations, like you said, hey, man, my cash offer is going to be super low, but I have these other options for you. They're already gut checking, go, well, screw this guy. I don't really want to get a low offer. What are these other things that I can get some more money? You set that expectation and they're willing to take it and listen. Now you've expanded their mind and you basically punched them in the face and told them, hey, this is how I'm going to help you now.
Well, and almost nobody that I talk to on a day-to-day basis even understands what frame control is, let alone how to do it. Oren Cleff's book is, I won't say it's the base for what I do, but it had a huge impact on me. His follow-up book to that, which is Flip the Script, was really fantastic too. And he actually goes back and contradicts himself a little bit. And I shouldn't say contradicts, corrects himself a little bit on his first book. But it's 100% right. And my focus, honestly, and I think this is where most people in sales screw up, and there's no doubt we are in sales. Whether we're buying, selling, raising money, dealing with a banker, dealing with an attorney, whatever, we are always selling ourselves. And most people in sales know you have to believe in the product you're selling. And newer real estate investors don't believe in themselves. So they can't sell themselves. And that's where they get stuck in, analysis paralysis. So yes, you have to go get some education. You have to know what you're talking about, but by the same token, you can't overanalyze everything and just get stuck in education mode forever. You have to take action.
Yeah, I like the seesaw approach that we call it, where it's education, execution, education, execution, education, educate.
Yep.
Because if you have too much of one, listen, if you have too much execution and no education, you're going to hurt somebody. You're going to lose people's money. Like, you're irresponsible. But then if you have too much education, no execution, what's the point? You go back to college or grad school or regular school and, not accomplish what you're trying to accomplish anyways. Let's pivot a little bit and chat about your operation and your team. So you have a lending company, and then you have a home buying company. And I know we chatted earlier about some VAs, and we're going to talk to that because I'm always intrigued, and I know a lot of people are intrigued about how you manage virtual assistants. But how's your team set up, and like what are their responsibilities?
So first and foremost, my business partner, Jeff, is a former IT professional. So I suck at anything on computers. Like when people ask me what my job is, I get paid to bullshit. That's what I get paid for. So when it comes to managing the VAs and stuff, that is all Jeff. But the reality is we've got a staff of about 6 people on our lending team. And we're doing 20 to 25 loans a month. So it's a lot. And then we've got 3 VAs in the Philippines, and we basically have one managing VA. She hires and trains the other VAs, and when it's time to get rid of one because they're not doing their job, she does it, and that's been a godsend.
What type of tasks are the VAs doing though?
So Maria, who's the managing VA, she's on the phone. She's answering our phones. She's doing follow-ups with clients. The other VAs are pushing paper. They're doing background checks. They're doing entity checks. Just all the underwriting procedure that goes into doing a loan. That's their focus.
Like processing loans too, like front facing with clients, or no?
No, not really. They're more on back end. Maria does a little bit of interaction with clients, but she'll do interaction with title companies, insurance companies, verifying documents, things like that. But our front end is, people. I'm trying to think. I think we have people working for us in 3 different states right now. So we don't have an office. Everybody works virtually. So I'm in my home office, Jeff's in his home office, and everybody does that.
Yeah, that's really intriguing for, I think, a lot of people as they grow, because it's like, oh, I don't want to do this, I don't want to do that, and I like asking people that we interview their stories related to virtual assistants and things like that, because it's interesting.
Can you clarify? Are your virtual assistants stateside, or are they virtual assistants overseas?
We have 3 of them overseas. Philippines. And then the rest of our staff, which is virtual, is in Missouri, New York, and Wisconsin. So that's on the lending side. And then the real estate side, I have an acquisition manager, and so it's a husband and wife team. And interesting enough, it's the gentleman that I bought my very first 2 properties from, those first 2 duplexes in 2003. He's been one of my best friends for all these years, and now he works with us with his wife. And then I've got a full-time project manager who, we cherry pick which properties we want to rehab. So, he takes care of that. And then my wife and I. So all said and done, between the 2 businesses, I think we're at about 12 or 13 employees, and myself, my business partner, and our spouses. So.
Yeah, that's a lot to manage. I got to ask you, because I think I was literally probably bitching to Jason last night and every phone call that I have about how I can't work from home as I sit in my home office today interviewing you. But with that being said, like what does your day look like? How do you manage the work from home process? I mean, Jason's business partner, Chris, who I love his statement, you home from home and you work at work, and that one resonated. I need to go to the office. I need the travel time to mentally get clear. I need to go sit in the office. I'm in the office, game time, go home. And when I work from home, it's more like, do it here, play with the kids, do a little bit there, go in the garden. Like how do you navigate the work from home process?
So I would say about 4 years ago, we had just kind of a change in everything we do. And we started focusing on our vision for our personal life first. And which just looked like mapping out what you want your day-to-day to look like from the time you wake up in the morning till the time you go to bed, and figure out how much time is left for work, and then build your business to fit within that time frame, right? So I want to be able to get up and work out a little bit and just have some time to read or whatever. And then my kids get up, and if it's time to go to school, I help my wife get them ready to go to school. And then I would do some more work, right? When they get off the school bus, or if we're, going to a sporting event that the kids are in or whatever it is, I'm there. So we designed our business to where I can work about 10 hours a week in the lending business and 10 to 20 in the real estate business. And everything else is handled by our staff. I literally just got back from a 5-week RV trip. Friday, I got back. We were gone for 5 weeks with my wife, my 3 kids, pulling our fifth wheel around the country. And I blocked out 3 hours a day, Monday through Friday, for actual work. And I don't think there was many days I filled 3 hours. So I feel the most important thing, and this is what we focus on in my masterminds that I host. And, it's build what you want for your life to look like personally first, then build your business to fit within the time that's left. That 40-hour work week is bullshit. That
Sure.
wasn't 100%. Now, that's not to say that you're not going to work. Some weeks there aren't going to be 40, 50, 60 hours. I mean, of course, that still happens, but it doesn't have to be the norm. You don't have to work 50 hours a week and hope someday you're going to get to retire and enjoy something.
Sure. And it also kind of depends, I think, what stage of your life or what phase you're at. When, like, would you state that you're in a growth phase right now, a preservation stage right now, kind of just chugging along? Like, I'm curious, because I think
we're in growth. Yep. In the lending business. In the real estate business, we're maintaining, we're cherry picking, right?
Yeah.
Like, we get deals under contract, and if it's really great, I'm going to keep it. And if it's not, I'm going to wholesale it off, and I'm going to give that wholesale buyer the loan and double dip. But
sure,
we're not actively trying to grow the real estate side.
Got it. And on the real estate side, is these mostly flips or are they rentals too?
It's a mixture. 75% flips, 25% rentals.
Got it. And is that kind of, like, if you fast forward to be doing this in 20 years from now, would that portfolio kind of be similar, or have you thought about, and maybe you guys already do, expand? So many people have expanded into other asset classes, because they've been trying to just do bigger things. And, it took Ian, a month to buy a 76 unit apartment building, and it took him, 4 years to buy 76 single families.
Yeah, so we've got a couple quarries that we own, which, that's mailbox money. And as things just appear, and I know that sounds a little bullshit, but when we're out marketing for houses, other deals pop up. Relationships, we've got attorneys that we help out that, they've got people in bankruptcy or divorces, and they call us to help solve their problems. Like, we just became real estate problem solvers, which I think all of us should be. And through that, other opportunities present themselves. I am not a huge fan of being a landlord with the personal vision we have right now. I've had tenants and toilets for all these years. I just had my 4th dead body like 6 weeks ago. And, all the crap that comes with that. Jason, this, like, how much time does it take to manage a portfolio of 100 loans versus a portfolio of 100 rental units?
Yeah. We sold all our rentals 2 years ago.
The downside is, of course, Uncle Sam loves us on the lending side because we've got very little tax deductibility.
That's right.
So we need some real estate to offset, the taxes. But like I said, I was on a 5-week trip. I can manage the staff and I can manage clients from anywhere.
So your acquisitions manager is running point on all your real estate deals.
Yes, and that, I never thought I would give that up, because I am a control freak, and I love negotiating. I love the deal structuring, but that was what was taking me away from my personal vision the most. And so last year in October is when we inked that deal, and it's been going really well.
And you're free. No, that's where I was going at with that question, because there's a few jobs kind of inside most organizations that it's not just hard to give up. Like, it's, if they don't And listen, I was always told by business coaches that if you hire out and somebody does it 80% as good as you, well, that's great because you don't have no job anymore, and they're when they're still doing it 80% as well. But there's a few jobs, obviously, an acquisitions manager seems to be one of the harder ones.
No doubt.
To outsource.
All right, let me ask you another question related to this topic. Is a lot of guys think, gals, real estate investors, it's like, hey, I got this much money, boom, now I'm going to go live my life vision. And they forget about their business vision. And then they go live their business vision, and then their life vision get away. Mostly your wife's nagging at you, yelling, screaming because you're not taking care of the kids, you're not doing your thing, right? How do you keep that balance? And then also, how do you navigate on your 5-week trip that you're staying invigorated to even want to do business on a daily basis? Because I think a lot of people, they let the pendulum just swing one way or the other, and then they wind up in a rut on either side of that.
So the biggest kick in the head that I got was I always had goals in my head, right? And I knew what I wanted, I thought, but I never wrote any of this down. And so when I was forced to actually write out a written vision, and we're not talking, I mean, mine fits on one page and it's in story form. So when you get that shiny object syndrome that pops up, both in personal or in business, you go back and read your vision. And does this take me closer to my vision or farther away from my vision? And your vision is constantly changing. A properly written vision, in my opinion, is written as if it's already happened, but things that you don't yet have, right? So for me, I look at it and say, okay, do I put a dollar amount in there that I want to make per year, or do I put the stuff that I want that money to provide for me? Well, I put the stuff, because a dollar amount just on paper, written as a goal, which was what we did in the past, right? We'd write down, I want to make $1 million a year. Why? What is the $1 million for? Right? So now my written vision has things like, I want to take a month-long RV trip with my family every summer. I want to go take my wife to a different Caribbean island for a month every winter. We want to spend summers in Montana. All these different things. The money is what's going to get that for us. But just writing a goal of $1 million a year, it's not enough for you to read it. And when that shiny object hits you, Ian, if you looked at your vision and it just said, I want to make $1 million a year, and you had this shiny object come into view that said, oh my God, I'm going to go buy this storage facility in California, which is going to require me to fly back and forth every month, and it's going to add 10 more hours of work to my week. Did it take you closer to your vision or farther away?
Do you put dollar tags on what those life goals are?
No.
So you're not putting dollar tags on anything?
No.
Because so here's and I understand where Ian's question's going, because I think a lot of people have made a good amount of money over the last few years in business. And we know a lot of folks that have made a good amount of money and they're, I don't want to say leaving their business by the wayside, but kind of, because they're going in other directions. Mm-hmm. It's like they hit their goal that they would have never imagined they ever would have in the past, right? Like it's almost like they overachieved, and then they're like their business is kind of they're going and doing their own thing, but like they're not necessarily living on cash flow. They're living off principal. Their principal is getting reduced. And I kind of can fear for them that like in a few years from now, it's like, listen, if you kind of didn't do that and they're only thinking a few years in advance, right? They're not thinking far enough in advance. And it scares me for these people. So I don't know. It's kind of hard to explain. Ian and I chat about this all the time, because it's like, hey, you did all the heavy lifting. We know how hard it is to start a business and grow a business. And they went from like, let me try to get on camera when I do this. They went from here and they're all the way up here. And now all of a sudden they're like, everything they do every day is kind of like diminishing it, when they could have just, listen, you 2x your business at $100,000, you have $200,000, right? Like, but like if you 2x your business, that takes the same amount of time. When you have $2 million, now you have $4 million.
So the difference the difference there, Jason, is they're not updating their vision, right? So
Right.
if you draft your vision and you should revisit it all the time, but you should also update it as things change. And so let's say you hit your monetary goals. It's no longer about making more money in your business. Now it might be more about, giving back or doing charity work or going on mission trips or whatever. But that person that got there should now rewrite their vision, both personally and business. So we revisit our business vision every year in January, right? Jeff and I do. And it's funny. I mean, Jason knows Jeff. Nobody else on this call probably does, but he was always the one that kind of held back on the big thinking for our business. And I remember when we said we want to get to $10 million of loan originations a year. And that was around the time we met Jason and Chris. And, now we blew that way out of the water. And now he's the one saying, well, I think we can hit, these bigger numbers. We could hit 50 million in originations. We could hit 100 million in originations. And I'm like, I am totally all on board with that as long as it does not mess with our personal visions.
Yeah,
right?
I love that.
But that's the point. You got to keep updating it. And the last thing I'll say about it is when you're working on your personal vision, draft it as if money and time are not a factor. Okay. You just have to dream, because if you filter it and you engineer it saying, well, I never have time for that, or I'll never have the money for that, that's not ever going to come to fruition then.
Yeah, but if you're not putting a dollar sign on those trips, because that was I'm not like, how do you know you're ready to even do that? Right? And is it responsible to take capital back out to do that when that capital could be, listen, one of the best things of a lending vehicle, a private lending company, is you can redeploy your own capital, right? And it makes very high interest rates of return, right? Yep. It's just like anything, right? If you weren't using capital, private capital in any of these businesses, you could be making twice as much money instead of having to pay a lender. Like, does it make sense to take that capital out where exponentially could grow and grow and grow and grow? And I guess what you're going to say is, well, it depends.
You're already filtering, Jason, right? Like, if your goal is to take a month-long RV trip and you put a dollar amount on it, you've already filtered where that RV trip's going to be and everything you're going to do on that trip. If I put in my vision, which I did, I said, I want to spend a month with my kids RVing across the United States. We didn't say, okay, we're going to stay at, this location for 2 days and it's going to cost $75 a night and we're going to go to this. Like, we didn't filter that all out. We just dreamed. We said, okay, this is what we want to do. So I was scared to death the first time we did it last summer. I thought, what's this going to cost me? 20 grand? I don't know. Yeah. Right. And I thought my staff was going to fall apart and the whole world was going to fall apart without me. Like, the first week of that 5-week trip, I was a freaking nervous wreck. By week 3, I was so chill. And by week 5, when we rolled back into our house last year, like, instantly my wife went to the calendar and said, we're doing it again next year. And I realized my staff was awesome. They did their jobs. Like, I don't need to micromanage as much as I do. But yeah, man, I really think that people are just they're gonna what if themselves out of their goals and dreams.
Right.
Fair point. Fair point.
As soon as you put a dollar amount on it, it's like, well, either you hit the checkbox, or it's like, well, I didn't hit the dollar amount, so now I can't go. And it's just like, it was another pipe dream that didn't come to fruition. Same thing happened with me. Now, I will say we go to the beach for 3 to 4 weeks every September. But my problem was in week 3 or 4, I had the itch to get back to business. And I was like, all right, I've hit my limit, and I didn't have that carve out to say, I need to do business for this many hours every single day to fill my needs. Because when you start violating your core values, that's when the situations arise. So for me, I love that my wife and kids were at the beach for 3 weeks or 4 weeks, but I wasn't fulfilled, and vice versa. And then it causes tension, and you need to stay in line with your vision, your core values, whatever you want to call it. So yeah, man, that's all good info. I know we've been on for an hour. I'm going to peel back one more layer and then we'll let you go. Do you ever worry about ego when people are like, man, you live like a really good life, but then you still want to grow a business, right? You're doing business and life at a really high level. Does your ego ever get in the way of that? Or do you ever say, do I really need much more? Or do I really need more money? Or is it good organic growth that is beneficial to everyone on your team?
So for us, we live in the upper Midwest. We don't have a high cost of living. We've turned down way more deals that could have made a ton of money because they took us away from what we wanted our life to look like. We also, I think Jason knows this, we also have a no assholes policy in our company. So we don't do business with assholes. We don't take on asshole investors. We don't lend money to people that are going to be hard to work with. And it's not about how much we make. It really isn't. I could care less what my net worth is or what my monthly nut is, as long as I'm living, what I want for my vision. Because I know personally, I know a lot of people, and we all know a lot of people that have built these astronomical businesses, multi-million dollars a year, and they're divorced. Their kids don't talk to them. They're going to die lonely. Nobody's going to be at their funeral. So for me, the ego check is, am I being a good person? Am I helping people? Am I making enough to sustain, my employees, give them a good quality of life? And can we give them bonuses and help them? And, yeah, we get plenty of people that give us shit because we're always traveling. We're always gone. And sometimes, you got to kind of check yourself at the door and realize, man, I'm not trying to brag about this trip we just took, because I don't want somebody else to feel like they could never do it. We're just excited about the trip we just took. So yeah, we try and keep our ego in check for sure.
Good question. That makes sense. All right. So as we're wrapping up, one question we like to ask a lot of our guests is a recent book that you recommend or podcast. I don't know if you listen to podcasts or if you read books, but what's a recent book or podcast that you would recommend?
Yeah, I mean, I listen to a lot of podcasts, but I would say from a book, I do want to go back to Oren Klaff. And I think everybody should read both of his books. Read them in order, though. Read Pitch Anything first and then Flip the Script second. Because that's not just, negotiating real estate deals. That's your whole life. Like every day is a negotiation, whether it's with your kids, your wife, your husband. Doesn't matter. Everything is a social interaction. And frame control, what Ian said earlier, when you understand frame control, man, you can really do well.
Well, especially with raising capital for those out there that are raising capital, working with private lenders, because if you don't control the situation and you need capital, like you will get your ass handed to you and you will get abused. Oh, yeah. And that is not a fun place to be in. And most people that have raised capital for long periods of time have learned that the hard way. And keep in mind, my one thing I always tell everybody who's raising capital is, as much as you might think you need that capital investor needs you as an executor to deploy their capital for them responsibly at high rates of return. So think about that as you're doing that.
Are you a PSU alumni?
Yeah. So yes and no. I don't admit this to too many people, but Victoria's calling me out now. I was a sprinkler fitter in my previous life, so I put in fire protection, and our apprenticeship program was done through correspondence courses through PSU. So I do have a degree from PSU. I've never set foot on campus. So yeah, no, I've never admitted that publicly. So now I'm outed. Thanks a lot, Victoria.
There you go. She lives in Pennsylvania too. I think she went to PSU. And I grew up around here. I never got the Penn State cult. I never understood it, but it's where I live. So it is what it is.
We're Badger fans. We gotta be.
There you go.
Yeah. Awesome, Derek. Why don't you tell everybody where they can find you?
Yeah. So couple things real quick, and I hope it's okay. I mentioned it,
Sure.
Jason.
Yep.
I got 2 books that are coming out. So if anybody wants the free electronic version when they come out, which will be towards the end of the year, one is a book I'm authoring myself. The other one is co-authored with a whole bunch of other really awesome professionals, not just real estate. So just shoot me an email to Derek at bestreifunding.com and just say, hey, saw you on Jason and Ian's, podcast or whatever. Love to get on the list to get the book, whatever. And I'll have my assistant compile that list. And when it comes out, we'll shoot it over to you. The other thing is, I'm on Facebook, I'm on TikTok, and I'm on LinkedIn, but full disclosure, I don't spend a whole lot of time on them. So if people are trying to message me or stuff directly through there, a little tough to get a hold of me. So, and the last thing is we do have a conference that we host, and I'm not trying to pitch or sell. It is it's available out there. It's an advanced strategies contract called the Generations of, did I say contract? Advanced Strategies event. But the reason I mention it is because we really want people to bring their kids. It's called the Generations of Wealth. We have conference for 4 hours a day, and the rest of the day is networking. It's a 5-day event. It's going to be in Cancun, Mexico in February 2023. And so if anybody's interested, gowvoyage.com is the website. And, it is going to be limited. So it's not a hard sell. It's just like, it's really cool for our kids. The content is not for the kids. The kids get to be there and meet other kids who have parents who are freaks like us. And my 3 children have got a network of friends from across this country already. And my soon to be 16-year-old is already involved in our business very heavily. And it's all because of that. So
that's awesome.
Yeah, that is definitely awesome. So we put some of the information up in the feed. We'll put the information in the show notes. Derek, appreciate you. Looking forward to the book coming out. Looking forward to meeting you in person at some point. This was awesome and great information, and great for a time that's going on right now where we need more creative deals. You might need to raise some private capital and ultimately living a vision, especially for those of you that are trying to figure out how to get out of your W-2. This was all great information. And guys, if you guys enjoyed this show, if you got anything from it, if you it provided you value, or you think one of your friends need to hear it, please like it, share it. That's the best compliment you can give us. If you give us a share or leave a review on Apple Podcasts. We don't market, we don't take on sponsors. We don't do a lot of the stuff we normally do inside of our normal businesses to promote this show, because we do this show because we want to talk to people that we like and friends of ours who are killing it in business, and nothing else and nothing more. So if you got good information out of this, please share this stream, share this podcast, and we appreciate you, everyone. And Derek, again, thank you for coming on. Really do love it. Thanks, man.
Peace.
Yeah, it's been great. Thanks guys.
Thanks.
Thanks for tuning in to the Real Estate Reserve podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.